So today I'm going to tell you all about my strategy that allowed me to retire early. I've done another video on how I wanted to, what I did to retire early, but this is part of it. You need to have some type of strategy to speed up your earnings. So I'm just going to say it all today. I'm going to lay it all in front of you. I have to give you some pre-warning first. This is not an advice to trade. Done. That had to be said. Two, this is not extremely well structured, and I have to be frank with you. I just thought a couple of days ago, maybe I should do a YouTube video on this. I took a couple of notes. So if you are expecting something very well structured and exactly telling you what to do, then this video might not be for you. The best quote that I've seen on the internet regarding trading and other strategies is you will never find something that you can use straight away, but you will find ideas here and then, and this is what I'm hoping this video can do to you. So give you some very good ideas, especially if you are from a technical background. If you use Excel, for instance, I will give you an advantage, and I believe the Excel gave me this advantage when I was trading, and I can give you a couple of examples later on. I think that it's going to give you the tool, give you some insight, all my experience on this, and especially if you're young. I mean, I've started this relatively late. I think if I would have started earlier, that would have been also better, but I believe I'm still young, so it's still plenty of years ahead of me. There is a strategy that I keep using to this day, and I think it's doing well. So I can give you examples of all that. So without further ado, let's go into it. If we get started, this is all about trading, right? That doesn't mean trading aggressively, but it's all about trading. So the first type of trading that is available, I mean, I'm just going to say roughly there are two types of trading. I'm just going to simplify, probably others, definitely most types of investing. But when someone wants to put money on the market, there's two approaches. The first approach is they have a look at companies and they analyze the balance sheets, analyze, there's something that Warren Buffett does, for instance, or his team of analysts analyze stuff. And I looked into it at some stage, but I don't find that extremely riveting and interesting. And also, some people just sometimes getting wrong, very often get it wrong. Nobody saw the crisis or companies just falling over. Nobody saw that. There are some things happening like the Madoff, the Ponzi guy. If you don't know Madoff, you should have a look at that. Nobody, people investigated him, did due diligence and they say, oh, there's nothing wrong, this guy is legit. And incredible, banks were actually investing in him. So the banks with their teams of people analyzing and just choosing carefully, they invested in him when he was just nothing. There was just nothing behind. So this is why I think for me, not only I don't find that interesting, but I find that not very reliable. So the other type of trading is technical trading. So it's based on what the share is doing or the stock is doing. I think you call it stock, right? In the States, here we call it shares. But ETFs is preferred for me because it's a little bit more reliable, and explain why also a little bit later on. Exchange traded funds, if you don't know. So there are within technical trading, I believe, two types of technical trading, and I'm going to focusing on one today. So the first type of technical trading is analyzing visually, I suppose, in a way. And you have some very complex indicators, and you have some of the candlesticks and the likes. And I'm very surprised. I'm very curious about what artificial intelligence is going to do about all this. Are they going to be able to look at patterns, the technical indicators, and provide a very good trading method? That's something that I'm excited about. So let's see what he has to say. But there are two things about this. First, if something is working, there's only a matter of time until someone knows about it, and then everybody knows about it, and then everybody does it, and then the market aligns itself, and you cannot do it anymore. So this is the first problem with it. Now, the other problem I have with technical trading is for instance, if you look at books, and I had a look at a lot of books. For instance, candlestick trading, they tell you, oh, if the candles do this, then you should trade because look at the example, it's working. And they give you 2 or 3 examples of that working, and that's it. I mean, I just found that extremely ridiculous. First of all, it's subject to interpretation, and also you might have shown us only the examples that work, and of course you do. So I could write a book like this, and millions of people are writing books like this because it's so easy to do. You don't have to prove anything. You just can just say, oh yeah, so do it. Look, we'll show you 2 examples. That works. Anyway, the second part of technical trading is a technical trading that is simplified and that is looking at backtest. So I'm probably the only person in the world doing this, I believe. But it's based on some technicalities, but also backtesting. So what is backtesting? Backtesting is having a look at what happened in the past and see if that could apply to the future. This is, I suppose, what the detractors of backtesting are saying. So just to really confirm what backtesting is, you have a strategy based on indicators or based on some criteria, and you run it for the last 20 years, say, and you look at the chart. And if the charts will be going up and if the trends are going well, you say, oh yeah, why not? I'm going to keep trading this way. And for me, this is my strategy, and I give you, but I need to give you more than just telling you this is my strategy. Don't worry, I'll give you some very specific examples. Now, there are 2 things that people say against backtesting. The first thing that they say is there is the survivor bias. What does that mean? So that means that when you do this, you only look at companies that have been on the market for 20 years, obviously. So the companies that fell and that didn't work, they collapsed. And then you don't take them in your trading analysis, and therefore you only look at survivors, and therefore this cannot be right. Okay, half truth. If you want to have a way around that, I suggest you trade exchange traded fund of some very strong companies, some very strong. It's hard to define a strong company. I give you that. But you only have a look at ETFs or managed funds or something like that. Managed funds maybe not because you cannot trade, but have a look at ETF. Maybe let's keep it simple. Even you can even focus on only one if you follow my method that I'm about to tell you. So the second thing against the backtesting is that they say, this is. You are over-optimizing, what they call over-optimizing. So you tweak it so much because you have wishful thinking and you want the trade, your balance. And this is how we do backtesting. We look at the balance if we use this trading method. You want your balance to go up, up, up. So therefore you tweak your backtesting so much that therefore you have a perfect balance, and then obviously it's going to be right. So you are more or less, what is the word they use? Over-optimizing. There's no word for it. So I have something to say about this, and this is really, the core of my trading. And then what I was saying at the beginning, if there's only 1 or 2 things, you can get this off one video and apply it and just take all this and do your trading strategy. This is this. And I'm going to give you a very specific example. Let's say that your neighbor is going to work every morning, and you are with a flatmate and you want to bet on when your neighbor goes to work. So you analyze for a few weeks, and you notice that your neighbor leaves his home most of the time between 8:45 to 9, but not every day. On Wednesday, say he has to drop off his kids, so therefore on Wednesday he doesn't do it. So you've done your back testing. Your flatmate was just, maybe doing some fundamental analysis. Just, oh yeah, I know the guy. I can probably guess. And this is the fundamental guy. But the technical backtesting, he actually had a look. He took note for several months, and you've noticed that Monday, Tuesday, Thursday, Friday, 80 to 90% of the time, he was leaving between 8:45 to 9. On Wednesday, something different, he didn't do it. So therefore, you're very confident if you're going to bet against your flatmate, if you only want to do it in this period of time. So this is what they call it's over-optimizing. Of course, you're removing the Wednesday because you know it doesn't work. So this is not fair. It is fair, and it is your advantage. Use it to your advantage. And I'm going to give you a very concrete example that made me some money on a trading instrument, as they call it. So does that mean that your neighbor is going to do that forever? No, but I don't care. If he's done that for 2 months, what are the chances that out of the sudden it's not going to do this anymore? And if it does, you know that your system doesn't work anymore. You start betting with your flatmate. Yeah, win, pass, Wednesday, I don't want to do it. And then after something changed, new car, new job, whatever, he stopped doing it. And then you say, no, I don't want to bet anymore. I need more time. I need to analyze the new data. So I think that explains to you why I believe the backtesting, and I should call my system really the pattern trading, is you analyze the patterns. And this philosophy, you apply it to trading. Yes, we are live. It's like sees it as a seminar. If there's anyone watching, please let me know, because I don't believe I'm going to get a lot of views on this. But it doesn't matter. This is my legacy to you guys. So I gave you my neighbor's example. Now I can move on to the concrete examples that I had. So there are 2 examples that I want to give you. Now we're gonna go to the spreadsheet pretty soon. It's only a matter of time until I dig out a spreadsheet for you. But I want to give you 2 concrete trading examples that I have done. There was an instrument called the binary option at some stage. It's more or less it's like a standard option. If you know option, you know what I mean, but on a very short time frame. And everybody was saying it's a scam, you're never going to make any money out of this. And actually, the scam was companies were not always legit. And I got caught once with a company who just took money out of my account without me asking. I was lucky to recover the money, but after I was trading more using companies that were more reliable. And people were telling me, "Oh, that's betting. Why are you doing this, Ben? That's just gambling. You know, you're gambling on which direction it's going to go." And I was saying, "Yeah, of course I'm gambling, whatever." But I was doing some backtesting, and I was optimizing my backtesting, and I was starting with $5 bets, and little by little was winning, and after I was making $1,000 bets, and I tell you what, I had 7 or 8 happening at the moment. So they are very short trades. So they the trades go between I suppose let me just put that back. I'm not in the center, am I? The trades going from 5 minutes, even 3 minutes, I think, to 10 to 15 minutes. So on my last morning, I remember I had 7 or 8 trade of $1,000, and I cannot watch it. I'm just going in the next room, and after I come back, look at the result. Yeah, good. And then the day after, I wanted to trade, and I couldn't put more than $5 on my account. So that was funny because $5 on my trade. Sorry, it was funny because the guys, I called the company that was a reputable Australian company, CMC Trading. Don't tell anyone. And they said, "Oh, I don't know what happens. But they limited me because they knew I found the loophole. So back to that method that I had. 5 minutes, you don't need, when it's for trades for 5 minutes, you don't need to look for the last 2 years. I was looking just for maybe weeks or months back. But the trick was, and remember the example with the neighbor living Monday, Tuesday, Thursday, and Friday, I was only betting on specific trade that was Forex trading, that was the Euro, GBP, and stuff like that. I was betting on very specific pairs, which is fair enough, but at a very specific time. And this is the loophole that I have. And that Excel gave me that advantage because there is no trading analysis tool on the market that was that granular, that was doing this. And this is why, as an individual, and I'm sidetracking here a bit, as an individual, sometimes you have an edge against the big companies. The big companies, could be intimidated by those floors of traders. Oh my God, how can I compete with these guys? But they have an advantage. Obviously, they have some insider trading and they know the things earlier. But you can one bet on smaller amount, which they cannot do. No, they cannot say I'm going to put $200 on this. No, they have to put millions. And two, the advantage is using tools that they don't use. They have this fancy software, and I remember I had a guy from a company, was working in a company like that, came to me one evening and he installed this software, and I was just so overwhelmed. I said, no, move on. I'm gonna continue using Excel, and this is my this was my hedge on the binary trading. Nobody was doing this. I was doing it, and it was very precise. It was between 650. Oh no, I'm not giving you the exact hour here. Between 650 and 710. Say that I was trading that specific pair, and that gave me the advantage. And this is why I went from $5 bets to $1,000 bets. So this is an example of a pattern that I have found very specific, that I would have been told by some books. If books could talk, I would have been told, oh, now you're over-optimizing the system. Ben, it's not going to work. You're gambling, you're betting. Well, my bank account disagreed with you guys. So this is, I suppose, the first example. And my overall strategy is as this. First is I found those patterns. First, you find those patterns. And two, you combine the patterns. Where am I going with this? So once you have found this, for instance, this pattern, this very specific trade that you can find, let's say, between 7 o'clock and 8 o'clock, and you have another pair that you can trade between 9 and 10. So you pile them up, and that compounds the result. And when we go through my second example, I think you will find better. You will have a better idea. So let's have a look at my second example, which is actually the strategy that you can use if you have a little bit of technical knowledge, or if you can access to someone with a bit of technical knowledge. So let's get right into it. Okay, don't be scared. Don't be scared. It's getting close to a reveal, if you like. So this is my trading system. So it's very complicated, and I wouldn't give it to anyone because I struggled to understand it myself when I stopped using it for a little while. But I'm just going to give you the philosophy of trading, if there's anyone still here. Now, okay, so I start with a stock. Now, as mentioned, I prefer to trade with ETFs these days because I believe that they are a little bit more reliable, because you don't rely just on one share splitting a dummy. So I just going with ETFs. So here, for instance, I believe I have the SPY. I have with the SPY, which is the US index. So it's not down to the minute, so don't worry about that. So what I'm doing is I'm finding the trends that I mentioned. I'm trying to, let's say the SPY is my neighbor, and I'm just trying to see what it's doing repeatedly so I could bet on it. And this is where it all happens, actually. This is where I'm having a look at the trend. So I'm just going to explain to you what I'm doing here. So this is the one period, this is 2 periods, this is 3 periods. What I'm doing here, I'm looking at the SPY behavior for the last month. Let's say at the moment it's month, or it could be weeks or days. It's up to you, but for me, I'm using month on this because I don't want to trade too often. I have other things to do. So I'm just looking back, just using three scenario here: 1 month back, 2 months back, or 3 months back. And I'm looking at what the SPY was doing the last 3 months, and I see the scenario where I would trade if in the last 3 months I had such an amount of return. So let's try and clarify this. Let me give you a very specific example. So here, let's say in this line here, I'm looking at the last 3 months. Now, on the period that I'm analyzing, if the SPY would have done if I only trade when the last 3 months the SPY is down 0 to 1%, then I would have made 26% of return. If I would have traded between 1 and 2%, if the SPY would have done between 1 and 2%, free period back, I would have made 24%. Okay, so you could tell me, oh, that's not much. But the trick is to find a pattern, to find a range large enough, removing all the risk, and to see what it would look like on the chart. For me, a balanced chart, I mean, which means the amount of money you would invest. Hypothetically, this is what would really give me the decision if I trade or not. So if we go back to this example here, I can tell that if I would trade between -3 and 6 here, I noticed that I would have won during all those months. Not all the time, but in adding all them up, I would have won. And you can see here on this chart here. So this is the outcome of the free. So I can select which period I want by using a number here. So in the last 3 months, that might be a bit clearer for you. If the trade was between 0 and 1%, I would have made this. I would have made that if it was between 1 and 2%. So what if I only traded when the SPY was between -3 and 6% return in the last 3 months? What if I only traded in this? Instead of staying there and having all those going up and down, what if I just focus on this? I might not win all the time, but let's see. So this is what you need to do using your Excel skills. You need to have a look here and put all that into a spreadsheet. So at some stage I got carried away. There is a stop. There is a drawdown that I need to talk to you about, obviously. So this is the outcome, if you like. This is the real SPY. It's trading all the time. And this in blue here, I'm just simulating for the last 3 period. If I only trade between -3 and 6, this is the blue here. So you could tell me, Ben, that's rubbish. I followed your method and I'm earning less than if I would have stayed in a SPY. But there are 2 things that we need to add to this. Is you need to have a look at the drawdown. The drawdown, it's the biggest amount of money that you would have lost if you had stayed in a trade. So here, for instance, the drawdown for this is you would have invested here and at this point here, you would have had a big loss. So the drawdown in the baseline here was 51%. So if you would have stayed, and it's probably more likely to be in this point here, you would have lost 51%. Now, with this method here, and I'm not sure why those things are being struck off, sorry, but in this instance here, this is probably because, okay, in this instance here, my drawdown is only 6%. Can you believe it? In this, if I would have stayed in this from the beginning, I would have only lost 6%. This is nuts, this is crazy, and I'm using my own ratio. So I'm dividing the return by the drawdown, which doesn't really make sense if you read all these technical books, but for me it does. So I have a ratio of 1.39 and the SPY only has 0.2. So this is the first benefit, is that you notice that the drawdown of my trade, of course I didn't make as much, but I risked less. The return per period, and that's a key one. The return per period with the SPY was, every month in average return 1%, which is already quite good. But with my method is 1.67% because I've selected only this. And what does that tell you? That tells you that this is the biggest return per period, and I don't trade all periods. Okay, we are back. I finally got rid of those strike through here. Okay, so I just wanted to show you something here. The percentage per period is much higher with my method. The drawdown is much better. That's the second advantage. And the third advantage, obviously, is that I only trade for 114 months, as opposed to the SPY who's always in it. And therefore, that allows me to trade something else. And this is what I was mentioning before. You trade something else in this, and this is what I'll be showing. This is the next part of my method. So first part of the method is find patterns like this on SPY, and I've done it for the SPY with a tons of other ETFs. I was doing it on stocks before, but and I had a good weekly one, but I just couldn't find myself trading every week, especially with the change of time that we have here. I'm in Australia for the moment, not for long, but I had to get up early, and that's just driving me nuts. So now month, and also trading is good, but I don't want to do that all my life. This is my legacy to you guys. So now I'm just going to have a look at my other spreadsheet. Okay, we are back. So the last piece of trading that I'm doing is once I've selected any here, you see that was the various types of trade that I have. Once you've selected your stock, like for instance, I have SPY here, SPY, SMA. Sometimes I used also the moving average as an additional component, but as you are doing SPY, you put the SPY, you do this exercise that I was doing before, like this. You do it with several ETFs, and then you copy the month by month. You copy the outcome for each line. Here you have a one outcome. So for the month, you make sure that you align the month. So here I have copied the result of the SPY trade. Here I'm doing it with a triple Q. I believe I do the XLK now, which is also a technical ETF. And here, this is the bond that I am trading, and this is other stuff that I'm doing. So I'm just going to show you how it works based on this. Okay. So this is an example of, this is the SPY, and that we thought was quite impressive before the SPY, didn't we? We thought, oh, I should have stayed in the SPY, but look at this with this trading method here. Look where it takes you, and I think the initial investment I have is 20,000, so it takes you 10 times here. This is much better, and this is, I think, the same thing on a different time frame. But look at this, the regularity. And I think this is probably, that might be the node compound, I believe, the node compound. So I like to look at the non-compound sometimes, which means that you don't reinvest the money that you earned. It gives you a better idea on the chart. So, and this is by combining several of the trades that I mentioned before. Now, okay, so this is where I'm selecting. I mean, I don't want to go into all the technicality of the Excel stuff. I'm selecting, I have all my potential trades here, like here, as I was mentioning, SPY, QQQ, and some junk, a bond, some TLT bond, and the likes. And here what I'm doing is I'm combining them. So I'm using my Excel to combine them, and here I put 6, 4, 5, and I go and digs. You realize why I'm not doing a demo on this Excel. It would take me a full week. So here I'm taking the 6th trade here, which is XLK, and I'm putting them in this order, and then therefore as we've seen, we don't trade all the time. So this is my first selection. I'm trading with this first. And when there are periods when I'm not trading with this, I will be trading with that one. And actually, this is a strategy that I'm using as we speak. I'm doing this every month. I'm trading the XLK and the SPY using the criteria that I have found. And then what you're doing is that you are having a look at the gaps that you have there. You trade this, and if there is a gap in this and this, then your fallback is the bond, and you trade the bond. But you can also, and this is what I'm doing as well now, you can also decide, I'm not going to have only one trade going at the same time. I want to have 2 trades, and this is exactly what I'm doing here. So here I want to always be on the market for 2 trades. So I'm just saying I have the XLK, and it's a different Excel logic, of course. But what you're doing is you say XLK and SPY. Those 2 will be my priority. So if they both meet the criteria, I'll be trading those two. And if they are not, then I take the best of the TLT and the 𝗏𝐽𝐾. So this is just to give you an example. You don't have to trade only one instrument at the same time, and actually the more you do, the better it is. So this is it. This is the trade outcome that I have. So you can see here, and this is, you know, this is beautiful, and you need to obviously keep an eye on it. And I'm being a bit lazy. I don't always keep an eye on it. I'm quite confident that the SPY is not, you know, that crazy behavior. Of course, we always talk about the big jumps it's having and the big drops it's having. But once again, this is not a trading advice. But you know, if you take some ETFs, you definitely be less exposed than if you trade a stock. And here, you know, I could walk you through quickly my spreadsheet, my monster. You know, if this spreadsheet is worth $20,000. Okay, if someone wants to buy it, just tell me. It's not genius, but it just took me so long to build this little by little. Obviously, I had a lot of time in my hand, and this is the overall summary that I had. Remember always, you know, and this is the percentage return that I was looking at. You know, the strategies: 22, 24 compound. It's huge. 32, 29 compound. And obviously, I was having also a look at the drawdown. It's also, you know, each line is a different strategy here. And by multiplying or by putting a ratio of the return vs the drawdown, then I have 1.3, 1.4. And currently, I am trading the ETF SPY, 𝗥𝐿K, and the likes. And I've had several years above 20%, but I have 1 year that went not so good. I think it's during COVID or just after COVID, where I did a -20. Did I? So that's consistent with this. But I am, you know, I am well ahead. So I doubled my money in just a few years. So this is it. If you have questions, please ask me in the comments. As I was saying, this is more my legacy. I'm not expecting to get any views, subscribers, or anything with this, but I just wanted to put it out there. I've never walked that through to anyone, so I thought it'd be a good opportunity. And then obviously I have some a little bit more user-friendly demos on this channel. So if you want to have a look at those, you're more than welcome to have a look at those. Okay, so this is a wrap.